Good morning, Steve Reed with the Morning Grain Comments. Quite a bit of red on the screen this morning with beans down 6 cents, corn down a penny, while wheat's up 3 cents. Stocks are lower, crude's lower, gold and silver is lower, and I think in the grain markets we're continuing to react to a lower momentum, at least in the bean market, and with the also in the corn market. Wheat's trying to grab a little bit of support on talk that there are 2 vessels that have arrived at the U.S. Gulf to load U.S. soft red winter wheat to China. As far as the specifics, fundamentals are concerned, first of all, data from China suggests their economy continues to slow. That's offering some resistance to the commodity markets. China population continues to decline, and now the population is below India. It's going to be a little drier in central and northern Brazil over the next couple of weeks, and Argentina is also going to see some net drying. U.S. soybean exports down 21% from last year. The USDA is looking for a 12% drop. Nopal crush was a record for December at 195 million bushels, but soybean oil stocks grew 12% from last month. The Brazil spread as far as production estimates pretty wide, with a low of 135 and a high of 153 million metric tons. USDA is at 157. Argentina crop looks like it's going to be higher than USDA's 50 million metric ton. Some people are reducing China's soybean imports below 100 million metric tons. Over in the corn, exports are running 29% above a year ago, versus USDA's increase of 26%. Argentina's corn crop could be a record and above 60 million tons versus the USDA's estimate. And Brazil is less competitive than the U.S., but Ukraine is still cheapest, and Argentina will soon be offering corn for exports. It is interesting to look at the protests that are going on in parts of Europe, Germany, and Poland due to low prices. We did see that Algeria bought 900,000 tons of wheat, mostly from Europe. Despite that, the Matif wheat futures are making new contract lows. Egypt is in for last half March. Looks like Russia will be the cheapest, and all this bodes bad for U.S. export demand, with our exports running 16% behind last year, and the government's calling for a 4% decline. We did note that 20% of the U.S. winter wheat crop was exposed to these recent record cold temperatures, but few expect winter kill to be an issue. We are looking at funds now short 42,000 contracts of beans, 49,000 contracts of soybean oil, 242,000 contracts of corn, 67,000 contracts of wheat, and long only 11,000 contracts of meal. Dalian soybean futures and meal futures and palm oil futures were higher overnight, while corn was lower. So continue to see weakness in the soybean and corn market, and looking at maybe a little support in the wheat market.